I'm Kerry. I'm a retired financial advisor. I'm not here to entertain you. I'm here to educate you. I've got a pretty long video here I want to share with you, and it's a sum total of how I think you can learn how to invest in this market and make yourself a better investor. This is not financial advice. This is me sharing my knowledge with you. I hope you learn from it.
Best of Us Investors presents Kerry Griegmeyer.
This is my trading views chart, and it is I subscribe to the premium. I also have bought some plugins that give me a lot of the information that you'll see as we go through here. But I want you to understand that if you'll understand how charts work, you can get a feel for the overall momentum of the stock market. We know that the Dow is basically flat for the past year, but do we know why it's flat and what's performing well and what isn't? When you get through this, you'll know. So the first of my stocks on my chart is Apple. And I think we all who have been involved in the stock market understand Apple. It's had a tremendous run up. That line is the Fibonacci replacement. And what it basically says is when a stock has a good, strong run up, it will most often retrace itself either to 50% or 75%. So as you can see, it ran up to about almost $200 a share, and now it's retracing itself, and it's come down to a support level, which was supported by a gap. It closed that gap. Basically what that says is if a stock jumps up and creates a gap in its candlesticks, eventually the market will retrace it, and you see it did. So that's Apple. Apple is up, what, 15.5% for the year, and it just touched its 200-day moving average. It's well below its 50-day. Again, those are two key signals. That is its support level. This is its historical support level. Let's go on to Amgen. This is Amgen. It's in the medical field. Amgen for year-to-date is up 4.85%, but you can see it's above its 200-day moving average. It has a nice run-up, and now it has a pullback. You can see it pulled back and filled that gap. But its general trend from the 200 and the 50 is upward. So that's my take on this. Okay, let's go to American Express. This is American Express, a stalwart, a pillar of the stock community. But guess what? It's for the year, it's up 2%. It hit its high here at about 179, and it turned. And it went down, hit a support level, covered this gap, has come up to a level of resistance right there. But look where it is relative to its 200-day moving average. And what is the trend from its 50-day? Its trend is down. Okay? What would I read into that? Interest rates are going up. Consumers are having to cut back on their expenditures. I would say American Express has some hard times in front of it. This is Boeing. Guess what? Boeing's up 29% this year. That's right. It started down here at about 144. It got up to 241, and it's currently here at 183. But look at this. Where do you think Boeing's going from here? Well, the Fibonacci says it'll go to 181. It did that. Fibonacci says its next stop is 147. I'd put my money on that. Why is that, you say? Boeing lost $4.5 billion last year. They have $52 billion in debt. The cost of that debt last year, interest rate, in other words, is $2.5 billion. It's projected the cost of that debt because of rising interest rates will go up to $6.3 billion. If that all happens in 1 year, Boeing will double its losses. Okay? That's why I don't like Boeing. That's why Boeing has turned south. So where do I think Boeing is going? I'd say somewhere around $150 a share from its current $183. But let's move on. Caterpillar is a stalwart. Jim Cramer loves Caterpillar, but look where it's headed. Just touched yesterday and today its 200-day moving average. This, again, here's a gap down here. Is it going to fill that? I don't know. But the general direction of Caterpillar is not up. Touched its 200-day. The 50 has rolled over. This is how you need to look at stocks. This is Salesforce, relatively new to the Dow. We can see where it's had a tremendous run up to about $263 a share, and then has started to pull back, has filled all its gaps, and is now, again, yesterday, hit the 200-day. Yesterday was a rough day on the market, up a little today. Fibonacci says it's coming to 181. What is it for the year? Well, it's up 26.5% for the year. Okay. But again, this is a relatively new company with a high debt load and consumer spending coming down. Cisco, been around since the early 2000s, was a big player in the dot-com bubble. It was one of those that went from 100 to 10. As you can see, Cisco is up for the year. It's up 20%. But are you comfortable with that? You can see here it has a gap. It has yet to fill inside the Fibonacci retracement above the 200-day. I would say in the near future, Cisco is going to be about a 51.29 stock. From there, we need to watch it. We're all being told by CNBC that oil is strong, that it's still with us, it's going to do well. This, again, is Chevron. I think I remember they're in talks to maybe buy Hess. Was that the right one? I believe it is. And you can see it's down about 5% from on a year to date. What's its trajectory? It's retraced its Fibonacci. It's got some support level right where it's at right now at 159, currently at 160. Fibonacci says it can come down to 154. I don't know. As you can see, its relative strength is pretty weak, and its MACD is just kind of hovering in a negative. This is a stock I would say, based on oil prices and all, could have some upside potential. The next one, though, is Disney. I don't think it's difficult to figure Disney out where it's going. I don't think we have a low enough measure on our chart here. Disney is down 18% for the year. It's not high off of its lows for the year at about 79. It's right at 83. My take on it is it's going to find a new low. Again, Disney is a mismanaged company right now. Bob Iger has been brought back in to kind of straighten it out. This is not somewhere I'd want to go. This is Dow Chemical. As you can see, it's about flat for the year. What's its trajectory? There's the 200-day, there's the 50. When that 50 turns below the 200-day and gives you a turn down, I think it's pretty evident where the direction is going. Now we get into a financial, Goldman Sachs. I think if most people were asked without looking at Goldman Sachs, they would say, well, that's a good, strong stock. Do you really think so? Do you really think so? Look at the direction it's going, particularly since it hit, I mean, there it hit its high at about 300, and look at that trajectory. That is from the left corner to the right corner. That's Goldman Sachs. That's one of your biggest financial institutions in the United States. There's the 200-day, there's the 50-day. It's looking for a new bottom. Home Depot. A stellar. I mean, it made money off of the coronavirus. I think if you would have asked me before I looked this up, what direction is Disney going? I would say what's going up. I mean, I'm repairing in my house. I'm having some work done. Well, apparently I'm the only one having any work done. You're not. It's below its 200. It's 50, has turned over, heading to cross the 200. It's broken the deepest level of the Fibonacci. This was all created, I'm quite sure, from the coronavirus, and Home Depot is paying it back. It's searching for a new bottom. This is Honeywell. Again, one of the stalwarts of the Dow, has given us tremendous performance. Honeywell for the year is down 2.7%. But look at this. I mean, and particularly since it was at 210, it's now at 181. It looks like it's gotten down to this support level of 179, 170, yeah, and I think it's fine, looking for a new way down. Again, this is a company with a lot of debt. If the cost of that debt is going up, and I don't think it has a bright 6 months, 8 months. This is IBM. The big six, the quiet of the big six. Nobody knows who its CEO is, and nobody really cares. But again, hit a high back here in September of 23, and its direction from there has been down. It broke its Fibonacci. It's probably coming down to a support level of 129. I hope you're getting the drift here. And what I hope you're doing is saying, nobody's telling me this. Nobody puts charts up on Fox Business or CNBC. Nobody's telling. They tell me the Dow is flat, and the big six, the Magnificent Seven, are supporting it, but they don't tell me what is happening in the individual stocks. Now, this is one that's up. This is Intel. It's up because the government says it wants to bring the manufacturer of semiconductors to the United States, and they're anteing up some of the money for it. But again, I still own this because of that, because they're building 3 plants or foundries, I believe, in Columbus and another one in Arizona, and the government can't let it go dead. It's on the 200-day. It's moving up. You can see it kind of dove down here, and then when the announcements were made about the government making the control or helping them build these plants, it turned up. It's above its 200. It's below its 50. You'll have to make a judgment on this one. This is one, again, that surprised me. This is J&J, Johnson & Johnson. What's that all about, huh? What it's all about is talcum powder. This company's getting sued like crazy, and it's trying to find a court that will allow it to separate out part of its business so that it can file bankruptcy and get out of the lawsuits that it's facing. You can see it's searching for a new low, and this is in the Dow. Did you know this? Did you know it crossed the 50 and the 200-day crossed back here in October the 19th, and it's searching for a new low. And if you want a stock to short, if you want to play that game, there's some real opportunities in the Dow. Here we have J.P. Morgan, again, one of the stalwarts of the financial community. Were you aware that 2 days ago, it crossed its 200-day moving average and is looking for a new place to find a bottom? Did you know that? You don't know it unless you've got trading views and you've built a covey or a group of stocks that's called the Dow Jones, and you go through it on a regular basis to see what's really happening. Well, everybody knows Coca-Cola is a wonderful stock. Well, Berkshire Hathaway, it's about its 4th largest holdings. But did you know it's down for the year? Yeah, this is Warren Buffett's drink of choice. And as you can see, it had a good run for most of this year, trading between 63 and 58, and then it came and it said, nope, we're going down. We're going to fill this gap down here, and it did, and it's come all the way down to about 52, currently at 55.66. What's my take on it? Well, again, this is a stock that is affected by the grocery prices. If mom's got to make a choice between cereal and Coca-Cola, I think I know what she's going to choose. Had an excellent earnings report just yesterday and gapped up. If you're a short-term trader, I'd feel real confident in the next week it'll fill that gap and you can make a little money there. But I'm not real confident about Coca-Cola going forward. I mean, it's a stock that will be with us forever, but it's got some headwinds. It's not a tsunami like maybe Amazon, but it's got some headwinds in front of it. And then look at this one. This is kind of mirrors the same thing that we just saw in Coke. Fell off a cliff back here in July of 2023, came down, found some new lows, crossed its Fibonacci, went below its 200-day, its 50 is going down, got a little bit of a boost in the last couple days, and that's McDonald's. Again, it's the housewife, the mother. Where do you think she's going to spend her money? She's got to feed the kids at the table before she buys them a Happy Meal. And McDonald's has got some debt. You can look at the financials and you can see this. They've got some headwinds. Until these interest rates are put behind us, these stocks have some work to do. They have some difficulties. Look at 3M. 3M has been around. I used to live in Minnesota, so I was extremely familiar with 3M and its notepads. Below its 200-day, but below its 300-day. Gapped up today, had a good earnings just yesterday. But again, a debt-ridden stock that is going to deal with the tsunami of Jerome Powell. He's created it. He was forced to create it because our government debt has gone out, flooded the country with cash. And now we got to take it out of the system. And 3M is one of the stocks that's going to suffer from it. This is Merck. Merck, again, was one of the beneficiaries of the coronavirus, made a vaccine, and we all lined up to get the vaccine. But have you gotten the last vaccine? Well, that's why Merck isn't doing so well, because you haven't gotten the last vaccine. Are you going to get the last vaccine? Did you even get the flu shot? These are the kind of things that are affecting these stocks. And then when you add to that the debt that they have to deal with and the increased cost of servicing that debt, they drop below their 200-day average. Paul Tudor Jones says you don't want to own a company below its 200-day moving average. How many have we seen so far that's below the 200-day moving average? If you don't do this on a regular basis, you don't know this. Now, here's a company that is supporting the Dow. It's above the 200-day. It's flirting with the 50-day, but this is Microsoft. And Microsoft earnings are going to be coming out. Let's see when that is. Coming out this evening, the 24th. Based on ChatGPT, I would think those earnings might be favorable. But you can see the momentum is coming down. The MACD is trying to make a decision which way to go. I want to buy Amazon, but I want to buy it when it fills this gap, when it fills the Fibonacci. So I have an order in to buy Amazon to buy Microsoft. I'm not sure that its earnings are going to support my buy price, but I think some of the others that follow it will, and I'll be okay. This is Nike. Again, it's a must-have in my closet because I value my feet, and I'm still something of a jogger and a trail walker and runner. So I'm a player in Nike. Nike had some good earnings. This again is their 5-10-year trend. Came down, bounced off of it, got a buy signal. That's some of the software that I own that said buy it. But the problem is it said to buy it up here. It would be up on that buy, but it's still It's below the 200-day moving average, above the 50. So if you've got some courage, you might say, this is one I want to buy. But I'm going to ask you, how's it going to be affected if China invades Taiwan? And that's where all my Nike shoes are made, okay? Until they get some manufacturing in Mexico, I don't know. And until it gets above the 250, I'm pretty sure. Now, everybody's buying food. This is Procter & Gamble. Has supported and stayed strong, better than some, but still trading sideways. Its Fibonacci has a price and its support levels of 141. I'd feel comfortable if I owned this stock, but I don't see a bright future for it. I'm more interested in who's going to benefit from artificial intelligence, and I don't see the cans and the soap and whatever at Procter & Gamble talking to me when I go into the grocery store. So this is just a stock I'm not interested in. Well, insurance is doing well. Warren Buffett tells us always insurance is doing well. Well, let's look at it. This is Travelers. I don't know. Is it the fires? Is it the drought? It's not doing well, okay? Below its 200-day moving average. And again, Paul Tudor Jones tells us you don't want to own anything below the 200-day, and particularly if it's below the 50-day as well. And you can see its momentum is down. Its MACD is down. So if I'm a trader, this is not something I want to be involved in. It's come down and it's bounced off of its support level. Its next level is down here around 149. Again, if you don't come to these charts, you don't know this. This is healthcare. Well, healthcare is doing fine. Yeah, it looks like it's gained some strength in the last couple of in the last month, but now has turned down again. The healthcare units. Before I'd buy this, I'd want to go and look at their financials, see what kind of debt they have on their books. I'd want to find out if like the pharmaceutical or like the Walgreens, which I'll show you, and are they getting sued? This is Visa, got a good trajectory, came and bounced off of its 200 and showed some strength, showed some earnings. Earnings report, in fact, is this evening. So I'd want to see what that looks like this evening. I'm not real strong on credit card companies. I don't like them particularly because, again, they're subject to interest rates. Right now, with interest rates going up, I would say, yeah, well, they're making more money. But I also know that credit card delinquencies, as I showed you in yesterday's video, is at an all-time high. So I'm kind of afraid that maybe they had a good quarter this quarter, but I'm not so sure as those credit card delinquencies work through the fourth quarter and we get that first quarter report. I'm not so sure that Visa is something that I want to be a part of. And then this is Verizon, had a excellent report and gapped up, but it gapped up after it has taken a dive, a skydive over the last year, and has come down dramatically. Came down and bounced off its support level at 30. Showed some strength. Got some good news this morning. If I were a day trader or a swing trader, I'd be shorting this sucker at 34, and it's got a gap down to 31. That looks like an easy $5 to me, or $4.50. But that's again me. Then look at this. Oh my God. We used to be a strong patron of Walgreens, and then we started supporting our local community pharmacist. That's Walgreens. That's Walgreens, and these poor distributors of pharmaceuticals are falling into this opioid suits and getting judgments against them. And I look at Walgreens, who was up around 42 and now is half of that. I'm not surprised you might not see another half on this and come down to around $11 a share with all the problems that they have and all the headwinds. No, it's not a headwind. It's a hurricane. But this is a part of the Dow. And then we come down and we end up with Walmart. Walmart's, you can't go bad with Walmart. Walmart provides people who are on budgets, a place to buy products and guarantees the lowest price. Again, there's your 200-day moving average, and you can see it pretty much stays above it. Was below it back here in October of 22, broke above it. Then in November of 22, the 50-day crossed it, and then it's just been follow the 50-day up, follow the and so I would look at this and say this is a stock that if I were in this category, I don't. And again, my direction is towards artificial intelligence, machine learning. I'm not so sure how Walmart is going to play in that space. So this is not a buy for me. But it looks like a safe stock if this is what you're looking for. So that's the Dow. That's how I assess the Dow, as well as I have this analysis that I always come back to and say, what is their financial strength? This is the kind of work that I do on our website. This is how I make financial decisions. I hope you found this educational. I don't get up every morning and say I'm going to entertain my audience. I don't want to entertain you. I don't want to flash and amaze you by video production. I want to teach you. And I think what I have just given you is a college-level course on how to invest. I hope some of new investors find this, learn from this, and become a better investor. That's my objective. I want to come down here into my office and every day work to make you a better investor. And I'll extend that even further on our website at Best of Us Investors. Come over, take a look at it, learn about it, and see if I can't help you.